the US economy attracting substantial foreign capital to help finance government borrowing, corporate investment, and financial markets. The country consistently runs trade deficits, which means it imports more than it exports, and it relies on capital inflows to help balance that gap. In 2025, foreign investors purchased large amounts of long-term US financial assets, including hundreds of billions of dollars in equities and significant sums in Treasury securities. Europe accounted for a major share of inflows, while Canada and Japan also maintained sizable exposure. According to official Treasury surveys, foreign residents hold more than $30 trillion in US securities, including stocks and bonds. While substantial, that figure refers to total securities holdings and not total US debt. At the same time, national debt has reached historic highs. By early 2026, gross federal debt stood near $38 trillion. Rising interest rates, meanwhile, have made servicing that debt more expensive, with borrowing costs averaging above 3%. Annual interest payments now exceed $900 billion and consume a growing share of federal spending. With trillions of dollars in debt maturing in 2026, the government must refinance large sums, potentially in tighter financial conditions. Among foreign holders of US Treasury securities, Japan remains the largest, with holdings around $1.2 trillion. The UK follows, reflecting its role as a major global financial hub. China, meanwhile, has reduced its exposure in recent years, but still holds roughly $700 billion. Canada and investors routed through Belgium also maintain substantial positions. According to some reports, foreign investors collectively own roughly 30% of publicly held US Treasury debt. And this structure means the US benefits from strong global demand for its assets, particularly given the dollar's role as the world's primary reserve currency. However, shifts in global sentiment could influence interest rates and borrowing costs at the margin. Continued foreign confidence, meanwhile, helps keep funding conditions stable. While the US is not dependent on foreign creditors alone, global capital flows remain an important pillar of the American financial system.